A boycott held by desperate home buyers across multiple cities in China is refusing to pay mortgages on unfinished buildings. Some people were forced to live in these unfinished buildings or so-called rotten tail buildings without running water, electricity, sewage system simply because they spent all of their money on a down payment of a house and have nowhere to go. Imagine yourself living in one of those. Massive bank protests erupted in Henan over 40 billion yuan of frozen customer bank funds. A massive bubble is imploding in China's economy, with the real estate market industry contributing 30% to the GDP of China and a near collapse of one of the largest real estate developers, Evergrande. China is experiencing a 2008-like financial storm. And why does it matter to you? Well, China is the second largest economy in the world after the United States. China is also responsible for manufacturing over 20% of all our daily items, just like my clothes here. The feds even came out and said that the fragility in China's commercial real estate sector could spread to the US. Multiple different companies in the United States invest and operate in China, including companies like BlackRock, Qualcomm. To understand why China is undergoing such a financial disaster, we will have to take a closer look at China's real estate market and its history. But before we do that, I would really appreciate if you could hit the like button. It will help my channel immensely and spread the video so more people can see what's going on. And thank you for doing that. The Chinese real estate market has experienced rapid growth in the past decade. With double-digit growth every year since the 2000s, the exponential growth can be explained by the change in government's policy back in 1998. You see, before in 1998, the Chinese government controlled the distribution of housing, and the real estate market itself only played a secondary role. The real estate market operated under a dual task in which both the government and the market mechanic existed. Mortgages did not exist for individuals. People were working for government-owned enterprises under the Communist Party, which was very dominant at that time. They were provided with a home a lot lower than the market price due to the subsidies from their employer. But everything changed after the Reform Policy Act was introduced in July of 1998. Instead of giving individuals home as work benefits, local government has established programs to sell real estate and land to people and companies, instead of providing them housing as part of employment benefits. After the reform in 1998, people's perception of real estate shifted from something purely practical to an attractive investment. Local governments were also selling industry lands to companies to create more jobs and boost employment. With more jobs and employment comes more population and spending, thus creating a huge demand for residential real estate. Local governments would then auction residential land to the highest bidder, oftentimes a real estate developer company. The growing population combined with the cultural obsession Chinese people have with real estate, the demand for housing is just off the charts throughout the last 2 decades. The real estate market got so absurd that people were buying houses not to live in, but rather keeping it empty thinking that the property value would increase, creating 65 million empty homes, meaning that 1 in every 5 homes in China are empty, enough to house the whole population of France. Taking full advantage of this crazy demand for housing, the majority of the Chinese real estate developers use a pre-sale model, where the house is sold before even built. Property developers would then take the funds from the pre-sale homes that they haven't even built yet to buy more land to sell more pre-sale homes. This model requires an influx of people to pay the down payment for more houses as it gets bigger and bigger, in order to build the house that the developers previously promised. It's really like how a Ponzi scheme works, where you need new investors' money to pay an old investor's return. You know what's even more surprising? That the income from these pre-sale homes accounts for the biggest income source for major property developers in China. The problem occurs when the real estate developers have started to miss deadlines they promised and struggle to move forward due to the lack of funds, or flat out just abandoning the whole project. This is exactly how the home buyers lost trust in the developers. They started a mortgage boycott where all the home buyers stopped paying their payments unless construction resumed. Soon, the boycott movement would then continue to grow over 300 projects in about 100 cities in China. Due to the loss of public trust in the real estate market, home sales has been sharply declining since February 2021, triggering a domino effect on China's real estate industry as most Chinese developers use the pre-sale home model. With real estate being one of the most important sectors in China, it is inevitable that the damage will impact other industries in China as well, and banks are one of them. On July 11th, a massive protest erupted in Henan in front of Bank of China, where over 40 billion yuan of customer bank deposits were frozen since April. The officials in the bank claimed that they were investigating unlawful banking activities. They were also claiming that all the money was stolen from a criminal gang headed by a man named Lu Yi. This wasn't just an isolated event though. Over 400,000 customers in China were unable to access their life savings in multiple different cities. To make matters worse, a quarter of the banking industry's total assets are held by 400 small lenders, which often have opaque ownership and governance structure and more vulnerable to corruptions. For every country in the world, including the United States, the banking system plays a huge role in the economy. China's population losing faith in the banking system is the government's biggest concern. Additionally, a bank run will also be devastating. So what is China doing to regain control of the situation? The government recently approved the bailout where they passed a plan to establish a fund with up to $44 billion, lending loans to multiple distressed real estate developers to finish their projects. However, the damage has already been done. With the real estate industry making up 30% of China's GDP, they have already missed their GDP growth expectation in the second quarter of this year. Home prices in China has fallen consecutively for 10 months straight now. With 70% of a person's net worth in China is tied to real estate, this incident will definitely change how the Chinese look at their investments in real estate. Thank you guys for watching, and if you want to see more videos about finances, please subscribe to my channel and I'll see you guys next time.